Welcome in, welcome in. Are you live over on TikTok too?
We are. First time over
Live
there on
on
TikTok. Live on
first.
TikTok.
I see you there.
Cool.
Can you hear
Hopefully
me?
you can hear me okay.
You can hear me.
Testing 1, 2, 3. What's that?
You can hear me
I
on
hear you on
TikTok.
I hear you on Zoom.
No, you can hear me on TikTok too. I'm listening.
Oh, okay. Cool.
Yeah.
We see some
So
people coming in over there. Oh, there's Matt. I see you over there.
what's up? What's up? There we are. I'm just gonna sit here and get things rocking. Welcome in, everybody. Let us know where you're tuning in from, whether if you're over on Facebook, TikTok, or if you're here on Zoom. Let us know where you're tuning in from. We want to know where you're from because I'm over here in Cincinnati. It's nice and cold, and you got Mark that's just soaking in the sun.
I'm in sunny Florida. So how's everybody doing? Let's see if I recognize any people in here. Looks like a lot of new faces.
Yes, we got some
I
new
like it.
faces. We like to
I
see
do.
new faces. Let us know where you're
Oh, we
from.
do.
We need to know. We need to know. Don't be scared. This is a very interactive call. We're here to help you, and we want to help you in every way possible. Well, when it comes to real estate, I should say.
There you
So,
go.
all right. No one's. I mean, everybody's being shy.
Hey,
Just I
John. John, how you doing, man? Where you from?
I am from Tampa, Florida.
Right down the road. Not
Nice.
too
Where you
far.
at?
I'm in Boca Raton.
Nice.
Just
I was
north of,
born in Boynton Beach.
oh, nice. Just north of Fort Lauderdale.
Nice.
Nice. So how long you been
Wonderful,
over in,
wonderful,
yeah, what's that?
wonderful place. Fort Lauderdale is awesome. I'm down there a lot.
Okay. Very
awesome.
nice. Yep. It's a good time.
We got
Cool. Well,
Karen
pleasure meeting
from
you.
Connecticut.
Go ahead.
We got Karen from Connecticut. Welcome in, Karen. And if you guys can, feel free to turn on your cameras. This is a we want to kind of see who you are. That way we can network with you and connect with you. We want to be able to connect with you guys because that's huge is connection. Mark, how important is connection when it comes to real estate?
Networking. That's why everybody's here. They all understand, especially everybody here on Zoom, everybody understands the power of networking. Networking is going to make you grow to another level and just get out there. I was on a podcast a couple years ago and somebody asked me a question one time and they said, because I've had different businesses, but I've been in this one for quite some time. And he's like, what is the biggest conception that people think when you first get into real estate? And I said, the number one thing is that your competitor actually can be your business partner. And that's really was the biggest takeaway because a lot of other businesses, you want to keep quiet, you want to keep the secret sauce. Some of the old time investors, they still have that mentality a little bit. They don't want to share their knowledge. They're trying to keep everything quiet. That's why a lot of these strategies have been so quiet for so many years. But now, since social media have come along, we're out there paying it forward. And it's like we put out there and we teach. And if we teach people, they're going to learn. And then if they have a question or if they know what I'm buying, like right now, I'm buying a lot of mobile home parks. So if what they know that I'm buying, then they may bring a deal to me at the same time. But I'm still also buying a lot of residential, especially in this market. I'm actually just had a meeting today with a couple people to start gearing up to start acquiring more residential properties because the market is prime right now for seller financing deals.
Now, why is that? Why is the market prime for seller financing?
Because the sellers are having a hard time moving. When it's a buyer's market and the properties are sitting for 2 months plus, they're more open to doing more seller financing because they're feeling the pain. That's really what it comes down to. It just there's still some markets still doing okay, but a lot of markets are pretty much in the same boat. I posted something the other day in a seller financing group, seller financing homes group that how much the market's pulled down. Like we're starting to see a correction here in Florida. Florida took off like crazy during during the after COVID, and we're starting to see a little bit of a pullback there, mainly because of the condo markets, because of the condo situation, and then we're also a lot of the big builders came down here and started building, and now we have all this inventory coming online too as well. So, but you still look at certain markets. What's weird is when markets were hurting during COVID, like say San Diego and Boston, that was a soft market, but now those markets are more of the hotter market compared to the Florida market. So that's kind of what's going on there.
I got you. I got you. All right, we got Hawaii. Is the market good in Hawaii for seller financing?
Yes, Hawaii is a hot market still. Hawaii is always hot.
There
You
you
know, I
go.
have actually Mary Lou, whoever is asking that about that question. Mary Lou is one of she's in my program, and she does a lot of business out there in Hawaii, and she does really well on doing some sandwich lease option stuff. So it's really good on that.
Okay, that was Renee that was saying that. So
Thanks, Mark and Matt. Looking forward to learning more about how you all work and uh, connecting with some of the other individuals in this group. So thank you.
Welcome. What part of Hawaii are you in?
I'm in Maui. I actually live in Kihei.
Okay. So I'm trying to remember which island is it where with the Pearl Harbor? Which island is that one?
That's in Oahu.
Okay. Yeah, I
That's an
spent
island of Oahu.
yeah,
So I'm on
I
a
spent some
little
time.
smaller island than Oahu. I go over
Yeah,
there from time to time.
yeah. My other half's family retired out there. They're out there for almost 30 years. They're in that area. What's that area called? They built Disney Resort there. They built Seasons, like all these different resorts.
Oh
Beautiful
gosh.
area. Yeah. The
I think
sunsets out
that's
there
on
are
the Big
just
Island, if I'm not mistaken. There's so many islands here in Hawaii to actually enjoy, but I do know what you're talking about.
and it's, you know, one of the things I travel a lot in the summertime. That's the beauty of this industry. You can work remotely anywhere in the world. Like last year I spent in Tahoe and Seattle. The 2 summers before that, I was in Cape Town, South Africa. But you have to start working at like 4 o'clock in the afternoon because of time zone. But I love Hawaii because I can start working at 4 in the morning and be done by 10. So that whole direction.
Listen, the time differences, it can be crazy sometimes. Sometimes I'm up at 4 and 5 o'clock in the morning to meet people
And your
because I'm
day's
in
completely,
several different markets.
but then your day's done by 10 o'clock. It's great.
Oh yeah, I love it. I wouldn't trade it for anything.
Nice. Well, glad you're joining us.
welcome in,
Thank you.
Renee. And we got David over in Dallas, Fort Worth. That's a good market. So it's a big market. Lots
Yeah.
going on there.
It's a huge market. That
And
market's just
awesome.
rolling in
And
sub
John's
twos right now.
investing in Ocala. So
Yep. I like Ocala. That's a good market too. I've actually have several properties in Ocala. It's a great market. It's changing a little bit because of the prices and the rates, but it's still a good market. You can still find some great deals there.
okay, okay.
Yeah, it's
Awesome.
it's definitely going up a little bit now, but it's definitely one of the most affordable ones in Florida.
Yeah. That's why I like it.
Hi, my name
Someone was talking.
is Francine, and I live in Ocala, and I'm John's mom, and we are in business together.
There you
I
go.
like it.
Hi, Mom.
Hi.
Smart.
Awesome.
Well, welcome
Love.
both of you guys. What do you guys what are you currently doing? What's your strategy in real estate now?
Oh, I'll explain a little bit, Mom. We do sober living actually. So
Right.
we have quite a few homes in the Ocala, Florida area. And we partner with the different communities there and fill houses for people who need a sober place to live and benefits both parties on that. So I just bought a sub 2 house in Ocala myself. And when I messaged you, that's kind of what we were talking about, how I just want to see some strategies of protection basically to continue down that path because I like what happened. But I also obviously am hesitant to keep moving forward with more and more homes just in case there were to be some scenario, right? So I think the reason why I'm on here today is kind of talk about how you or anybody here protects themselves in a scenario when you start to get a few sub 2 homes or however you're financing those seller financing to make sure you don't get it caught in a scenario where you have to come up with a lot of cash out of nowhere when you weren't planning for it to get yourself out of a or deal with a sub 2 property.
Well, I mean, are you holding these yourselves or are you wrapping them?
So the owner is still holding the mortgage.
Right.
Um,
No, but I
but
mean, what are you doing right now? I mean, what's the deed? Is it in your name? Are you
the
holding
deed's
it
in
in
my
your,
name. The deed's in my name.
okay, in your LLC?
And the LLC, yep.
Okay. Again, I'm not an attorney. Just
Yep.
want to make sure, I'm giving
Yep.
that advice out. But what I would do is I put my properties into a land trust.
Okay.
Because it usually, because lenders allow it, they're aware of it, because of they allow it because of probate purposes, for estate purposes. That's what they kind of think. So, what I normally do is like, hey, like if I'm selling my property, be Monroe dash FL1, something like that, trust. We used to put it in property addresses trust, but the lender's starting to even call some of those due. So that's kind of, be cautious of that. And then you always want to have a backup plan. Like if something happens, and it's good because you're staying in the middle and you're not wrapping it, it becomes a lot more challenging when you're wrapping it. If anything ever happens, all you have to do is just deed it back to the seller. That's all you have to
Yep.
do. You can also do an agreement for deed, or in Florida, we call it an installment sale. That's another strategy.
Okay.
We can kind of go into that. That's a great one as well. Like for me, I never pitch, if somebody is not financial distress, I never pitch subject to, hey, Mr. Seller, keep the mortgage in your name and transfer it over to me. They're going to look at you like you're crazy. So you come up with another alternative. And then you can also do what's called a sandwich lease option. You can buy a property, go under contract as a lease agreement, and it allows you to sublet it. I've done hundreds of those. That's how I started my first strategies back in the mid 90s. That's how I got into it. So that's another alternative strategy. So there's a lot of different ways, but you want to get the deed because that's where you get the tax depreciation. You don't get it on a sandwich lease option. An agreement for deed, or installment sale, we call it. That could be written up in a contract where it can go either way.
Okay.
You can go who gets the tax depreciation, but there's so many great options there. I love it going down that path.
Yeah, this
So
person.
I'm sorry. I'm the business partner, and I just want to make sure I understand something with this, because I'm the old person that gets scared of everything, and he's the young person. So I just wanted to make sure I understood it. When you do what you were saying, do it in the trust, so it doesn't flag things as much. That's what you're saying?
Correct. It still can call it due. Plus, it creates anonymity where people don't see all your properties that you own. Say, for example, you have like 20 properties, somebody falls down and gets injured. They look up your LLC and they see all these assets sitting in the LLC. You're going to find an attorney. Oh, this is an easy shakedown. And they're going to shake you down for 10% of your net worth. So again, I'm not an attorney. So I just want to make sure I'm just giving you what I do is, you want to create a Wyoming. What I would do for me, I create a Wyoming LLC, has charging order protection. I can refer you to somebody, but you have charging order protection. So if you accidentally back up, you run over a child or something, you get sued. They can't make you sell your assets off. Like Florida, if you're a single LLC, they can go after your assets. A lot of states, they can go after your assets. Again, I'm not an attorney. I'm just kind of telling you from my
Yep.
experience, what I've seen out there.
I absolutely appreciate that. Thank you so much.
Awesome. All right. We got Justin here as well. He's from Springfield, Massachusetts, and he's new to creative financing. He's just hoping to get into real estate, and he's new to real estate. So welcome in, Justin.
Justin, how you doing,
Thank
man?
you so much.
That's where I started. I started my real estate journey up in New England, up in
Yeah.
Vermont.
Oh,
That's where I
wow.
started. So when I fly,
That's nice.
a lot of times when I fly into Hartford, not too far, and I drive right by Springfield, going up through Brattleboro.
Wow. Yeah. Thank you for having me here.
Nice. Welcome.
Yeah.
It's you're at a great age to start your journey. So just
Yeah, I'm super
educate.
young. I just came out of high school. I'm 18 years old.
That's awesome. Smart.
Yeah.
Stick to it. You stick to it. Even when you keep this in mind, and this is where a lot of people failure. If you're not failing, you're not learning. So remember that. If you're not failing, you're not learning, because you will fail. Expect it. Just minimize your risk if whatever you're doing. So what I'd
Yeah.
always recommend, just finding mentors and finding your way through the process and learning from a lot of people. Just educate.
Yeah, absolutely. This is why I'm here. I'm here to learn from everybody. Anybody
Awesome.
can give me advice.
Awesome.
Sweet.
Well, thank you for joining us.
Awesome. Sweet. So, John, how many properties do you have?
We are running 5 right now.
5. All right,
Yep,
awesome. So,
in
what's your
Ocala.
goal? What's your goals? The
We have a goal over the next couple of years of 100 residents,
Okay.
100 beds.
100 beds. Okay.
Yep, yep. So because that's how a house is kind of measured in sober living.
You
Anywhere
put
from go ahead.
you put 2 beds per room, depending on the size
Yeah.
of the room.
Yep.
Okay.
Yep.
Yep.
That's
I
our
have a good
standard,
buddy
and
that does that.
we look for 4-bedroom, 2-bath homes, or a 3-bedroom with a dining room that can be closed in, so we can make it into a 4-bedroom home.
Nice.
And
What are you
go
getting
ahead.
nowadays for a bed? I'm just curious. About 750 a week?
Well, no, not 750 a week, a month per bed.
Oh,
We get 160 a week, 750 a month per bed. Yeah, in that range.
okay. That's good. That's good money.
In Ocala, because we are able to charge a little bit less, right? So obviously in the bigger cities, right, you have a lot more cost behind the house itself, right? So if you go into St. Petersburg or something, your mortgage is almost double what you're doing for the same amount of home in Ocala. So your rent's double, right? So you might be getting 250 a week, but we found a really good sweet spot where we're working in Ocala with all this right now. And it just makes it so every time we open a house, it's filled in less than a month, and it just stays
Awesome.
full at that point. So we're not trying to take off like a rocket at all. We're trying to manage what we can and go at the right speed, so that way it builds right and we don't have a bunch of vacancies. But as of right now, we were just looking at a house right before my mom got on this call. We were looking at a house to partner with an owner who wanted to just do like a very long extended lease, kind of like you were saying, not where we owned it at all, but it was just an extended lease with them understanding what the business plan was.
Yeah. And now what I would do is I'll do an option, lock into a purchase price.
Yeah. Yeah. The
Yeah.
guy really wanted to stick to lease just in case. But we didn't even end up going with it. It was a little too far out of transit because we like to be
Cool.
right near transit lines. But
Yep.
we ended up backing out of it just so they have good transportation. So we have a good little thing we kind of do with how we're looking compared to bus stops, looking compared to where what businesses they can walk to make sure they can get a job pretty easily if they don't have a vehicle, and then how close they are obviously to meetings or whatever they need to do to work together to be um, continuing and successful in the process of actually hoping to do what they're successfully trying to do by staying sober and making sure that they're not going back into rehab or addiction at all.
That's awesome. And you guys are the type of people that usually end up coming into like wanting into my program. They usually own anywhere between 3 to 5, 7 properties. They've already got into it, putting 25, 30% down. All their capital now is tied up into their assets. So it's hard. So that's why they're always trying to understand the seller financing strategies, because once you understand them, you can negotiate a really low down payment to 0 down payments, depending on, it comes down to the seller's needs. That's what it
Yeah.
really comes down to. The key to it, and this is where a lot of people go sideways, the key to when it comes to seller financing, it's not always about the numbers. It's about the seller and them trusting you. So when you're talking to them the first time, 80% of my conversation with the seller is getting to know each other. So you got to think of it like dating. When you met your significant other, your partner, whoever it is, the first time you got to know each other. So think of that. They're getting to know you and you're getting to know them to make sure you guys are on the same page. So it's just kind of the same concept. So they're going to do business with you because they like you and they want to make sure you're going to do what you're going to do. And you're interviewing them to make sure they're not a crazy seller, because I've had those. So
Yeah,
that's really what
that's
it comes down to.
definitely, especially in the seller finance, that's concerning, especially in subject to if there is a
It's
scenario
really
with that
not.
mortgage.
It's really not bad. I've done
Okay.
thousands of them over the years. You just have to have backup plans.
Yeah.
And I've done well over 1,500, maybe more than that in the subject twos. And knock on wood, I've never had my deal, never called once. I've even had sellers
Wow.
pass away. So if you're buying a property, somebody that's older, that's why you want to always put it in a trust to help for the estate purposes. And then I always tell them, put the mortgage into a separate trust too. So if anything happens, to avoid probate, you don't have to worry about any of that stuff.
Okay.
And just again, if something happens, you can always transfer it back to the seller, or by that time you may have some equity in the property so you can refinance it. There's so many different options you could do. And then if you have quite a few assets, you can cross collateralize to being a private partner. And I mean, I wouldn't worry about it. If it's a good deal and you're doing well with it and you need capital, it'll come to you.
Yeah. No, we have a little bit of working capital, right? Still, we're just trying to extend it so I can get 100 residents. We're gonna need at least 13 homes running at that point. So depending on the city, so trying to get down payments for 13 houses, obviously at 25% or 20% down, ends up being quite the down payment after a while, right? So
I do 5% or less on mine. I
yeah, I'm
want whatever
saying
capital I
DSC.
put out, capital I put out, I want it back in 12 to 18 months, or I don't take the deal down.
Yeah, no doubt with subject to our solar finance, the traditional way with DSCR or traditional loan is more where with the 20%. So like a $250,000 home, you're looking at coming out 50 grand. Put it down over and over and
With a
over again is
50,
a little bit hard.
with that 50K, I could acquire 3 assets easily,
Yeah.
maybe 4. It all depends. And then you're in Tampa, another area. You're in Tampa. It's a great area to go out there and raise capital. So what I'd recommend is whatever CRM system that you're using, use another one identical and start raising capital. And Tampa's a great area to raise capital. Let me give you a quick example, because that's one of the stuff that we end up teaching as well. Is there was a physician convention. Have you been to a convention at all? Any type of
No,
real
I
estate
have not.
convention
Nope.
or any? What'd you do before real estate?
I'm in sales right now. I run a tech company right now.
Have you ever been to any of their conventions?
Oh, for sure, for sure. I've done plenty of conventions like that. Yeah.
Okay. And where have you been to a convention where you had to fly out to and spend some time there?
Yeah. Yeah.
All right.
Yeah. I just got back from
And
Vegas.
okay. And was the convention at a hotel or was it at the convention center?
There was a convention center at the hotel.
Okay. All right. So when you're at the convention, where does everybody hang out and network afterwards?
Yeah, dinners, bar. Sometimes there's events set up, right? Everybody's talking there, what was going on. There's the vendors usually talk in between the breaks if you're looking to talk to other vendors, but the actual customers, most of the business is done at dinner or somewhere else other than the actual floor of where the convention's at.
So let me give you an example. I go to conventions that are not real estate related. There was a cardiac physician convention going on at the Ritz-Carlton down in Miami. I'm not a physician. I can't get in. And guess where I end up hanging out?
Right at the lobby or the
Lobby
bar or
bar.
yeah.
Lobby bar. I end up
Yeah.
raising $475,000.
Wow.
So those are the type of things. Just get out there and again network. Oh, there's a
Yeah.
convention. What do you do? And I say, hey, what do you do? And they said, oh, I do real estate. And they always say, oh God, I wish I could get into it, but I just don't have the time. Ding, ding, ding. Well, I work with people such as yourself. We put their capital, we deploy it, but you got to be careful because if you don't know them, you can't start talking about deal because you have SEC rules. But you can start getting to know them, talk to them, build a rapport, and then get to know. So you have to have the 3-touch rule when you go to raise capital.
Yeah, I haven't heard of that before. I
Yeah.
haven't really
Yeah.
done anything to raise capital at this point yet either. It's all done my own personal capital.
Yep. But that's another avenue. You want to start opening that section up. Cool.
Yeah, that's cool.
Awesome. We got a question over here on Facebook. Hi, Mark. What are the basic terms and conditions I should understand before entering a seller financing deal?
What are the terms and conditions? For me, I'm always looking at the numbers. Terms and conditions are pretty standard. It's all negotiable. I'm surprised I can't see those comments and questions, but thank you for relaying that. I hit refresh, but it's not coming up. But anyways, for me, I'm always looking at the cash flow. David actually just joined us. He's a note buyer. He always is looking at the terms and conditions because he wants the best premium on buying notes. So that's another whole area. Hey, David, how you doing? But David is one of the guys. So when you originate notes, what we do is originating notes, and David is always like looking at the note buying aspect of the buy notes. So I would say you want to make sure that you have Dodd-Frank rules too. You have consumer protection regulations. So are you asking from buying it on your side or selling it? Because there's 2 different ways you can kind of answer this question. So whoever's asking that question,
Yeah,
if you
I'm
don't
pretty
mind
sure they're
putting
just
that.
talking about buying the buying side.
Okay. So you want to make sure, like for me, when this market is kind of in this condition right now, my minimum is 5 years of that a seller is forcing me to purchase that property through a lease option, or if it's a balloon or whatever it may be. If I'm paying top dollar for that property, I want to make sure that I have equity. So I use time value to be on my side. So I'm making sure in 5 years, statistically, there's going to be equity in that property. So you want to be able to refinance that property out. And usually you're going to need about 20% if it's non-owner, if it's an investment property. I think there's a lender in here also, she can even talk about it, but there are some lenders out there that may go to 90%, but most of the people are going to be about 20%. And if the market gets tighter, then sometimes they'll even go down to 30%. It all depends on the market condition, but usually if you're going to be in 5 years. So what I like to do is I like to do 7 years on mine, and I usually like to try to pay it off in that time, because I want to redeploy that capital. So my strategy is I like to buy it through seller financing and sell it through seller financing. So I like to buy it with a minimum on my end with a balloon if they want a balloon at 7 years, and then I have my buyer usually at 5 or 6 years. So I have that little bit of grace period. So if they can't buy it or something happens, it gives me another time, another way to find another exit or another buyer. So all these different scenarios will come into play as you're holding paper or you're creating paper over time.
I got you. And then Smitty's asking, how do you get your money back in 12 to 18 months? Is it through a refinance?
Um, Whatever capital that I'm putting out, I want my money. I try to get my money back in 12 when I'm underwriting a deal. Again, how I typically do my deals is I'm always using my end buyer's capital. So I negotiate a low down payment as possible with my seller with a long due diligence. I tell my seller what I'm doing. I'm putting a tenant buyer. Usually I do a lease option to my end buyer unless it needs some work. Then I will go ahead and sell that maybe as a handyman special as a contract for deed. But that's how I try to get my capital back as quick as possible on that one. Typically not a refinance because I'm using my buyers, but I have purchased multifamily as well, and got my money back that way too. And you could technically refinance it. I've done those before. I could be a fix and flip, and you get money back that way as well. But I'm in this market, I'm staying away from fix and flips.
Okay. Awesome. So if you guys are over on Facebook, I just dropped the link in the chat. Feel free to hop over here on Zoom or just drop your questions right in the chat. And the same thing with Zoom. Feel free to raise your hand or drop your questions in the chat. We're here to answer your questions. No matter what it is, Mark's here to answer it. Well, I guess depends on what it is. I shouldn't say what no matter what it is. Awesome. Sweet. Let's see here. Got any more questions coming in? No questions today? Man, people are, it's an opportunity. Mark, okay, let me do this. Mark, can you go over your experience and why people should listen to you?
As I said so. No. Um, I've been through a lot of experience. I've seen a lot. I've had friends that are investors. Um, Learn from our mistakes. That's probably the one of the biggest thing is learn from our mistakes because mistakes can be costly. I can't tell you how many times I've seen people come into the business and they put themselves into a bad situation, and especially if they're younger. And no offense to younger people like Justin, no offense, but you guys tend to be you don't look at the risk as much as once you've been through a situation. So you want to minimize your risk as best as possible. So again, I've seen it all, and I've seen regulations. I've seen
How have you
people
seen it all though? I mean, how many deals have you done?
in the thousands. I've been this spring will be 30 years. I've been in this game for 30 years this
30
spring.
years. Like
It's
creative
changed a
financing,
lot.
seller financing.
I remember our closing documents were so thin. We didn't have Section 8. We just rolled out the good faith, and nowadays the closing documents are like a book.
That's wild.
Yeah.
That is wild. Sorry, I'm sending over some info to people. Wow. Just to get them in here. All right. So you've done that for 30 years. What was one of the biggest lessons you took away from that 30 years?
I would say make sure you are using the right contracts in the right states. That was probably the biggest lesson. I remember going into a state that I'd never done business with, and it was a creative, it was a seller financing strategy, a lease option strategy. And I went in with my contracts that I've used in other states, and I thought for sure the contract would be good in that state. And that state had different rules and regulations for lease options. And I had to go ahead and evict somebody. And what happened was they pretty much ripped my contract apart. They just tore it up, and because it wasn't up to their standards, and like, what kind of contract is this? And ended up costing me about $47,000 on that. So that was probably one of the biggest mistakes. Just making sure instead of spending $500, $700, even $1,000 to have an attorney reviewer for that state. But nowadays you can find contracts, like you can go, there's legal websites you can grab some of these contracts off of for the states. But just if you're doing a typical seller financing and you're doing some of the like some of those, they're pretty standard. But when you're doing like an agreement for deed, or if you're doing sandwich lease options, some of those stuff, you need to make sure that you know the language in those states, and just have an attorney or even a title company review all that stuff for you. Again, I'm not an attorney, because I took the shortcut and I didn't use attorney. That's what cost me.
Awesome. That's good. All right, we got some more questions coming in. You ready? All right, this is from Sean. What markets are you projecting to have the most opportunity in the next few months?
I highly like to go to markets, jump onto like one of like Zillow or Realtor.com, Redfin, and look at markets where homes are sitting the longest. Like if you can find one sitting 3 months, 4 months, those are the hot markets. Um, but also you want to make sure that their numbers work in those markets. You have to make sure that whatever the PITI is going to cover the rents. So there's a lot of great markets out there right now. Every market's a great market. Even some of the blue states, people say, "Oh, I'll stay away from blue states." When I underwrite my deals in the blue states, um, if I'm going to hold them, I will go ahead and underwrite it more off of a Section 8, because I want to use the government's money, because it's guaranteed payment versus trying to evict somebody. That's so you those are the different. Again, it goes back to risk tolerance. So I'm always looking at the different risks, where I want to fall into on that. So,
Okay.
but get out there and just look at markets that homes are sitting for a long period of time. Those are hot markets right now, and actually that have come down a little bit in value. Um, if you go into the seller financing homes group and you type in my name on the top and you just look for a recent post, I posted something over this past week, and you can kind of see the markets that are pulled back.
Awesome. Now, we have, let's see, what was his name? Eddie. Eddie's asking, do you get deals with AI at all? Are you using AI?
We use AI all the time. David's the AI king over there. He's been teaching me stuff on AI stuff, but yeah, we use I mean, he's so far advanced in AI, but I use AI mainly for my VAs. I've actually started using it to comp properties now, believe it or not. It's been pretty much dead on. You just got
Okay.
to tell it to um tell the AI of what kind of
Okay.
condition the property is. So
Okay.
I haven't gotten it to the point of actually underwriting deals yet, but I'm sure it's coming. It's going to get to a point in time, but that is something that AI is definitely here, and it's making it easier. A lot of times, there's some great CRMs out there that will do a lot of AI for you, communicating with the seller, weeding out the sellers, and kind of setting up calls for you on, so they're more, they're motivated.
Awesome. And then Justin's asking, when buying any type of property, how would you structure it? Put it put it under an LLC?
Again, I'm not an attorney. But I always like to put my stuff into a land trust, and then have an LLC be the beneficiary of the owner of it. Um, Especially if you're going to be buying it through a creative and keeping a mortgage in the seller's name, what we call a subject to. But also, it just helps you to be able to get the tax deductions. It helps you with a little liability. There's a lot of benefits to it. I would recommend just jumping on and doing some little research on it. But I'm just telling you what I do in my situations that I've done when I set up LLCs.
Okay. Now you're doing land trust deals a lot, right? So when you're doing them over and over again, how much does it cost, like in general?
I do my own land trusts. They're easier to do than purchase and sales contracts. I just have the forms. But I would recommend, again, I'm not an attorney. I've been doing it long enough. That's me and my risk, and I understand it. But the first time you could, I would recommend an attorney doing it for you, or the title company. But they're pretty cheap. I mean, there could be less than $500, or it depends on the area and depends on how much they're doing in it. But it's so simple to do. Um, every single property has its own land trust. I don't put them all into the same trust. So if anybody looks me up, I don't have any property in my name. It's all held by different entities. I call them trusts as entities, but yes.
Awesome. All right. And guys, feel free to ask questions. This is a perfect time for you to ask questions. Now, Mark does have a program where he teaches all this in depth, one on one, not one on one, but in group coaching and then on Facebook, private Facebook group. And how many calls do you have? Four,
There's 3 calls a week.
three,
Yep.
four, maybe soon. Just to throw that out there. Maybe four soon. Working on one currently. But yeah, so Mark's teaching. I mean, I think you have 100 some students, right? And you're teaching them how to go over seller financing from property to property because every property is different and every seller is different. So, Mark, can you go into a little bit of why every seller is different for a different type of
Well,
contract?
my mentorship is totally different than everybody else's because everybody else is specialized in one thing. One may be just specializing subject to, another may be specializing in lease options, another may be specialized in novations. So because I've learned all these different strategies over the years, the way I go about it is you have to listen to the seller and figure out what the seller's needs are. And I talked about this a little earlier. If a seller's not financial distress, there's no way I'm going to pitch a subject to a seller. Hey, Mr. Seller, keep the mortgage in your name, transfer the deed to me. They're going to look at me like I'm crazy. So I call it like a tool belt. Depending on the seller's needs, that will determine on the tool to be able to pull out and use. Now, if the seller's behind in a mortgage and I got to bring the mortgage current and stuff to that nature, then I'm going to say, hey, you know what? I want to take this property over because I'm putting a lot of capital into this property. That's kind of where I go into. Then I want the deed. I always want to control the property as best as possible and try to get the deed. You may not be able to get the deed, but you can structure it in a way where you control the deed and have all the controlling interest, and you get the tax write-off. So those are the different options. A great way to start out if you don't have a lot of money is what I call as a lease option or sandwich lease option. I locked up a deal for $100 and end up making $50,000 off that deal, just off a sandwich lease option. I can post a video later on if anybody wants to watch a video. I break the numbers down on that, but that's an easy process, and you don't need a lot of capital, and it's a little less risk involved. If something happens, you can give the property back to the seller. It's an option where you can walk away. So if I have a seller that's open to seller financing and they want 3 years on it, and I'm paying high equity, if I can't get them to go to 5 years, I will do a lease option. So if the value's not there, I can walk away from the property. So those are the type of things that you kind of learn through. So what we do is anybody that comes into my program, the first thing I teach them is just get on the phone and start practicing and talking to sellers, because it all comes down to listening to the sellers and how to figure out their problem and how to solve the problem. I've talked about, if you guys go back and listen to some other Zoom calls we had, we talked about the seller needed $30,000 down on a $120,000 home, and it just didn't make sense. And he had over 12, 15 offers from other investors. I figured out what his problem was. He needed $25,000 for a camper. The guy had great credit. I suggested we built a rapport. We're on the phone for a good hour. He got to know me and I got to know him. I told him to go ahead and take a loan out for a camper for $25,000. I'll give him $3,500 down for his spending money also that he wanted, and we'll go ahead and make the payments. So we got that deal with $3,500 down, and we're making the payments on that camper on the 20th of every month. We have the money pulled right out of our account, sent directly to the credit union, and make the payments on his behalf, because I listened to the seller and I understood what his problem was, and I came up with a solution. So that's really, and those are the things that we talk about when they bring the deal in. They, first of all, they're out there making calls and getting leads. And when they bring a lead, they bring it into the group. We do it on Tuesdays or Wednesdays. They bring it into the group and we analyze the deal. If they don't have it under contract, I tell them, don't bring the address, but bring all the information. I always want to know why are they selling and what are they planning on doing with the capital? Because if you understand those two things, that's how you can be creative enough to solve the seller's problems and get into these properties with no money to zero down and build up a great referral source. Like I've talked about numerous times, I have over 600 bird dogs that refer me deals, trashmen, landscapers. It can go on and on and on. You're on mute. We can't hear you. Nope.
There we go. Now I was muted. Sorry. Awesome. Now, guys, I have a question for everybody. How many deals or how much real estate do you own? You own one property as in your residence, or do you own like 5 rentals? Let us know in the chat. Have you done a real estate deal yet? It's okay if not. You gotta start somewhere. And we have people that have hundreds of deals. Some of them have 5 deals. Just drop it in the chat, whether it's over on Facebook or over here on Zoom. Just let us know. We kind of want to be able to see where you're at in the world of real estate in general. And then Eddie's asking, what time are the calls? They vary in time, right? When it comes to the coaching calls.
They're usually in the evenings. Yeah. So Tuesdays, 6:30 to 8 Eastern Standard. That's what questions, that's any type of questions, that's what I run. On Wednesday is deal analysis and underwriting, but we do that on Tuesdays as well. That Wednesdays is 7:30 to 8:30, and then Thursdays is 6:30 to 7:30 as well. On that. So they're usually in the evenings to help you guys out for that stuff. And they're always recorded. So if you miss one, you can always but if you can't make it, you can always post it in our private Facebook group and then they'll answer that question. But a lot of times I will jump onto the private group and I'll answer the questions. And a lot of times I'll do it on video as well, like so everybody can kind of learn from it.
Awesome. So we got Rika, she's a wholesale and a flipper. How many homes have you flipped? That's another question. If you are flipping property, let us know how many properties you flipped. We got Ron, he has one that he owns and lives in. Awesome. So we have a lot of beginners, it looks like. So Mark, what is your advice to some of these beginners?
Educate yourself and network. Be cautious. We all been through it. I've been through it where I've had people out there that thinks you're the mentor and they end up snaking your deal from you. So do a little research on Google the person that you're doing some business with, because it is a small community, especially on social media. It's a small community, everybody knows, and word gets around quick. If somebody snakes and screws somebody over, everybody shares it to be warned of people doing business. But I'd highly recommend networking. Always find different people that know more, like mentors. I love mentors. I've always done extremely well in that area. What was the question? I kind of got lost track.
No, I was just what's like for beginners? What's something to tell them?
Yeah, just learn. One of the big problems where people come into real estate is they get the shiny object syndrome. They start learning one strategy and they spend a lot of time into it, and then they jump into another one and another one and another one, and we call it analysis of the process. Like, just get on the phone and start talking to sellers and understanding sellers, because there's a lot of it's all psychological, and start understanding and having those great conversations with sellers, because that is where the art is. If you can talk to sellers and really listen to them and build that rapport with the sellers and understand how to solve their problems, the rest of it will come to you, because you'll find good people to help you out. The capital will come to you. The strategies will come to you. There's so many different ways of coming to you.
Okay,
So
awesome. All right, we got Ron say he one that he owns and lives in, and he's flipped 21 properties. Awesome.
love it. That's
And
great.
we have a buyer and lender for STRs in Massachusetts and Connecticut. Awesome.
Another New Englander.
And there we go. You got another one up there. You got a note buyer for 15 years. Awesome.
It's got to be David.
Yep, that's David. And then we have a question over on Facebook asking, how long are we going to be offering these live calls that we're doing, you know, I'll go ahead and cover this. We do it once a week. We do it every Monday at 7:30. But let me tell you, if you're just looking for free stuff, you're not going to be doing real estate very long. I'll just be honest. I mean, yeah, free info is good, but we can only cover so much in an hour. And sure, you can sit there and learn 52 hours in a year, but let me tell you, 52 hours in a year will take you a long time to learn real estate. Mark has been doing this daily for how many years now? 30? And he's still learning stuff. Everybody's still learning stuff. There's
I
always a
do.
group.
I even join other groups because I always like learning other, uh, I like being the dumbest person in a room in a sense. I love to absorb all that knowledge, but you learn from so many other people and networking and getting out there. And I was, for several years, I was in another, we call it mastermind, where there's 20 of us in it, and it was $18,000 each. Actually, I'm in another mastermind. David runs a mastermind. I'm in his stuff on notes. That's a whole different, and once you understand seller financing, there's another whole world of making even more money on these deals. When you create these stuff, there's another whole industry on the notes where you buy and sell notes. That's another whole area, and that's beauty of this game is just there's so many ways of making money in this game. You just gotta, again, if you're new, you want to understand the basics and start learning and start making some money, so you start getting that passive income coming in.
Yes, but we're going to be here every Monday. So every Monday at 7:30. If you're, we really, I mean, we want to help you, but if you're just going to want free stuff all the time, go ahead and sit there and get the free stuff. But there is a program that takes you deeper. I'll be honest, it takes you deeper, and it is going to help you get to the next level. I don't know about
And
you, but I'm always looking to get to the next level.
But the thing about it is mine is nowhere near the cost of all these other guys out there. So what they're charging is just like, oof, mind blowing. And they get it. But I don't know why. I keep hearing people telling me, like I was just talking to that lady, she was like, why are you charging so little? I'm like, I don't mind it because I enjoy helping people. I really do. And then again, pay it forward. It'll come back around. That's how I always look at it. Because again, if I teach people the residential and you guys come across a seller that's got a mobile home park, you'll bring it to me.
Yep. No, 100%. So I want to go ahead real quick, just while we're on the topic. I'm just going to drop the link to schedule a call with one of our team members to see if it's right for you. Now, it's not right for everybody, and we're going to tell you if it's right or not. But I'm dropping it here for you. Schedule a call. It's a 15-minute call with either Reese or Tommy. I think Reese is in here. I think I saw Tommy too. I don't see him anymore. But
Yep, I'm in you.
there's Reese. So they'll hop on a Zoom call with you. It's real quick, 15 minutes or less to see if it's the right fit. Then you'll hop on a call with either Mark or me, and we can help you get to the next level from there. So go ahead and schedule a call. It's free. There's no that first call there is just easy call of seeing if it's a good fit. So hop on, schedule a call. Meet. I think there's time slots all day, every day for the next 3 days, 3 or 4 days. So go ahead and do it. Mark, I have a question for you. How much do you think you spent investing in yourself?
Wow. That's a great question, actually.
Wait, so you've done
I would say several
that
hundred thousand
several
over the
hundred. You've
years.
done thousands of deals, but you've had to do something to get to that level, right? So
Yeah, I mean, I'm always wanting to learn, one of the biggest ones was like about 50,000, $48,000 on a land development course, many years ago. Um, so because then I took the seller financing world and meshed it in with the development stuff, but then multifamily, um, a lot of different ones, but I always love going back to the seller financing and residential. It's just one of the easiest to do. Um, and there's so much more opportunities with them and it's easier. But I'm doing mobile home parks right now. I love the mobile home parks because what's been happening with the interest rates, the affordability. So I've been focusing more on affordability. So I really pay attention of really of the market. That's one of the biggest things. And you have to learn how to shift with the different markets. You have to learn how to shift with the different interest rates. We're always shifting in the political markets. Every 4 to 8 years, we're always changing our strategies. Like during the last administration, I was going big off of big in some of the blue states, because they're giving so much money out. I mean, they're just throwing money at us like crazy. I had one of my places where it was a 875 square foot, 2 bedroom, 1 bath, and they gave me $35,000 to redo that property. And after 5 years, I don't have to pay it back, but I had to put a Section 8 in it. I didn't mind that. Now with the new administration, I'm being very cautious on that and looking at different because I don't know what's going to happen. They're going to force people back to work to be able to pay for their places like that. So a lot of that you have to just pay attention to be able to adapt to the market conditions. And that's kind of what's happening over the last year. A lot of what we call wholesalers, they went out of the business. Even realtors, they went out of business because they're used to very vanilla and they don't know how to do anything creative and how to structure, creative seller financing. Where I've worked with realtors where I've done one deal, I did 18 deals with one realtor one year, and he loved it because otherwise he had to keep finding 18 new clients and keep, turn and burn type of thing. Yes, they may get referrals from them, but once they know my buy box, they went out there and they became one of my, they would hunt deals down for me. Property managers is another one.
Okay. So say like let's talk about someone just getting started, right? They don't know much about real estate. They don't know where to get started and they don't have any money. What should they be doing to get started? Would you recommend bird
I know.
dogging or
100%. Yep.
can you explain what bird dogging is and how it works?
Yeah, it's a referral source. So what you want to do, and you want to bring value to somebody. Like if somebody's going to come to me, and if I'm going to show them what kind of value am I going to get back in return? Yes, I can answer a couple questions. I can spend 10 minutes here and there. But if I'm going to be spending hours, I need some type of value because my time is worth something. And just like if would you give your time, which you would, I'm sure, but you have to kind of balance it out. So a bird dog is finding out that investor's buy box. Like my buy box is whatever the median price range for that area for that single family home, I will go 20% above and 20% below. So let's say, for example, the median price range is 250,000. My max is 300,000, and my low would be 200,000. The reason why is usually if it's low, it's going to be in a war zone. I will look at it. It could be a home that's in a nice neighborhood but needs a little TLC, or it could be a property that if it's more than 300,000. Then yes, you can find a property, but it's hard to find a tenant and a buyer for that property, whatever your exit is. I've seen it so many times where people come into business. Oh, the median price range is 250,000, but I got this deal and they want 500,000 for it. And the seller's open to it with zero down. Sure, that's great, but then it's going to be very hard to find a buyer for it, and then you're going to have to make those payments on it. So that's my buy box. So I like to give people my buy box, what I'm looking for, in a minimum population like 15, 20,000 is one of my buy boxes, and I have people go out there and look for deals for me, and they just refer their deals over to me. Depends on how much work they put into it is the percentage or what I'll pay out on that deal. So it's case by case on my bird dogs. But that's one of the great sources, great ways of starting out is becoming a bird dog to do that.
Okay. And then Renee's wondering, how does a real estate agent get paid through seller financing?
Just like any type of, just like a regular, you can list it. The only the only problem is with agents, you can't pay a bird dogs, you can't pay a referral fee because they're regulated. So they can't do that. That's one of the main reasons why I never became a licensed realtor. But just if you're doing deals, and like I said, I worked with this one agent for we did 18 deals one year. He got 3% on all my deals he brought to me. He knew my buy box. He knew exactly what I was looking for, and he started doing all the negotiating. A lot of times he already had the negotiating done for him because he already knew where I was. And we actually on a couple of deals we actually did deals together on it. So it's a case by case. And I've done deals with property managers. I had property managers that would bring me tons of deals, and we end up doing deals together because they had the buyer and the seller. They just didn't know how to structure it.
Just to add on to the Mark, bird dogs allow you to connect with Mark more closely, even because you deal with each other every day, every week. we use the same thing with bird dogs for note buyers, right? I've actually worked with note buyers who are brokers, became note buyers because we worked so closely together for years, them sending us deals that you can only get us like a free education because you're really paying for it at the same time.
Yep, correct. Sometimes you just want to make sure, and we can tell, and I'm sure David can tell, if you want to take action, that's one of the big things. You just don't want to waste our time and energy. I've had people that come to me, want to be a bird dog, and they never took any action. So if you're trying to be a bird dog and you want to try to get into this game, you want to make sure that you're taking action and doing what needs to be done for that.
Awesome.
Drag, I've never seen this map before over on TikTok. Drag the puzzle piece in place. Is that to make sure I'm alive?
And make sure that they do that to make sure that you're actually engaged with TikTok too.
Unable. I've never
Yep.
seen that before. Okay.
All right. And then, all right, Renee says, thank you for your answer, Mark. So do you negotiate the fee in advance?
For a bird dog, yeah, you probably want to have arrangements. So it would suck that you go out there and find a deal and it only gives you $50 or $100. So you want to kind of, but again, you got to bring value. You have to make it worth your time. Like for example, like the trashmen, I have to do a lot of research and dig it down. So them, I'll pay like $500 in a closed deal. Where I get my best deals are from hospice nurses. So my hospice nurses, I'll pay them between $2,000 to $2,500 because it's a referral, it's a lay down. Other investors I'm training, it depends on it. It depends on it. Anywhere between 10, it depends on what they put into it and how much work they're putting into it versus what I have to. And then if I have my team putting in their energy and work into it as well.
She meant with the real estate agent.
Oh, the agent? Yeah. Usually, yeah, you want to tell them like 3%, whatever you want to do like normally what I start out with is, start out 3% for me. Again, I have no problem paying as long as my deals and my numbers work. So I'm not cheap on that, but I'm not a big fan of wholesaler. I used to love wholesalers, but they've gotten crazy with their assignment fees. They're asking for $20,000 in assignment fee when it used to be realistically about $3,500 to $5,000 on assignment fees. But that $20,000, I could end up buying another asset.
Yeah, for sure. For sure. Okay. With the market prime, are you working on cash or buying notes?
What's that question?
With the market being primed, like perfect, are you working on cash deals or buying notes?
I don't look at either one of those. I look at my cash flow because I mean I've gotten deals with no money down and I've gotten deals of money back at closing. So I mean if I look at cash, it's infinity to return. Um, so again, I look at trying to get my capital back in 12 to 18 months. Yeah, I'm looking at my cash flow. I'm always looking at, like, for me, I want a minimum cash flow about $450, $500 a month in my monthly cash flow when I'm looking at a deal, especially in this market because the rents are pulling back a little bit in different parts. So you want to give yourself some breathing room. If that rent pulls back, you can have that coverage and, insurance costs going up. So I'm looking at that aspect of, but I also, depending on how I'm selling it, my tenant buyers or my buyers are taking care of that cost if their taxes, insurance goes up, or HOAs, whatever it may be. But then there's deals where I had one deal where I was only cash flowing $48 a month, but I had over $100,000 of equity in that deal. So it's a case by case, but typically that's what I'm looking at. David, you were going to say something?
No, say that, yeah, apples and oranges and that thing. I mean, note buyers, we don't look at all cash and cash. We basically buy yield, the interest rate of the deal. Um, Cash and cash is usually a typical spread you're making, like you're making now. But yeah, I'm not sure fully. If you would explain that question a little bit more, we can go back and revisit it. Um, I'm not sure if I follow that question.
Yep. Rob, if you are still over on Facebook, let me know. We'll have to see when he responds.
I have a lot of people in my program. They're always looking at cash on cash, like
Yeah.
cash on cash, cash on cash. I mean, that's the mindset. Everybody has their own mindset of what they're looking for in their returns. That's kind of what you're going to come up with your own mindset in the way you look at deals and how you want your returns, and you want to stick to it, and you want to stick to it and never kind of go away from it, because that's where people get into problems. You know, they'll look, oh, my returns on this, but yeah, maybe I'll go, because they try so hard to get a deal, and they want a deal so bad, and they take a deal down that's not a good deal just because they want a deal. That's where a lot of new people go get hurt in the business, and they make mistakes. So be selective. Be
Yeah,
very
don't be
selective on
emotional. Don't be emotional. Be driven. Have a calculator like Mark has, right? Have someone that tells you if it's a good deal or not. Don't let you make the decision if it's a good deal or not.
numbers don't lie.
Awesome. And then Eddie's asking, have you bought a house directly from the bank? I see a house sitting there owned by the bank for 7 years.
I have, but you're gonna need capital. They're gonna want that off their books. So if you can find a capital partner, and maybe even I think a lender, a hard money lender might be an option. Just negotiate a sweet deal as best as you can with the bank. You know, especially if the bank's been sitting on it for 7 years. That's kind of weird. Something must be going on with that property, because I'm sure they had other offers. If you do buy that, do your due diligence and make sure there's no major issues with that property. Could be foundation, could be roof, it could be something with the city or town. Um, Something's going on there that is a little bit more suspicious, because usually banks don't sit on a property that long.
I'd also go see what's going on with the property tax. Who's paying that? Is the bank paying the property tax? Something's weird there.
For sure. All right. Any more questions? We're coming close to the end of time. Coming close. Mark, you have any final things to say?
No, this is great. I'm glad that you guys were all here. Especially you new guys, Justin. You know, I'd love to see you get your career going. You remind me of then at your age. How old did he say he was?
18, just out of high school.
18. Yep. So I did my first deal when I was 19. And then I got out of it for about 5 years. I got sucked into the corporate world, and then I came back in when I was at 25, and then I never looked back. That's kind of, but I've had some other businesses throughout the years. But real estate I've always kept doing, and just real estate really gives me the freedom that I choose to, especially nowadays working remotely. You know, I just enjoy it, and I like that passive income. So smart. And I mean, you don't have to do a lot of deals, especially at your age. All you have to do is like 3 to 5 deals a year, and it'll add up quickly. But you get to that point, and you just start enjoying life. So, all right.
Of course. Thank you, Renee. Thank you. And
Yeah,
guys,
thank you so much.
oh, of course, Justin. Guys, don't forget to schedule your call as a free quick call to see if it's a good fit for you, if the program's a good fit. If you're ready to get started in real estate, or if you are ready to take your real estate knowledge and skills to the next level to help you scale to get past the 5 to 10 properties that you have, and you're ready to learn how to seller finance with 5% down, um,
Or less.
or less, 5% or less. Sometimes you can get zero, but it's always good to have reserves. Just remember that. So if you're getting started, get some reserves going. But anyways, if you are looking to learn more, just schedule a call. We'll see if it's a good fit for you. And if not, it's okay. We'll actually send you some free trainings once you schedule a call. So hop on the call, schedule it. You got to show up though. Please show up. That way we don't waste our guys' times. We do have 2 guys that are, they're getting in the real estate too. So they're looking to make effort. So hop on a call, talk to them, see if it's a good fit for you. And if not, or even if it is, we'll send you free trainings, this help you get going. So Mark,
Well, thank you guys. Take care.
thank you guys.
Bye-bye.
See y'all later.
Thank you.
Bye-bye.